Good afternoon, everyone. You're very welcome to the Sherry FitzGerald First Time Buyer webinar. My name is Shane Quinlan, Managing Director of Sherry FitzGerald Mortgages, and I'm delighted to be your MC today. This is the fourth in a series of First Time Buyer webinars we have hosted. I hope you got to join our previous three webinars in 2023 and found them informative. The focus of today's webinar is on the First Home Scheme. This was a scheme that was launched in 2022 to support first-time buyers in their home buying journey. I'm delighted to be joined today by Michael Broderick. Michael is CEO of the First Home Scheme, and Michael will bring us through the detail of how the scheme works and how first-time buyers can access the supports. I'm also joined today by my colleague Rachel O'Leary, Associate Director with Sherry FitzGerald New Homes. Rachel will give us an update on some of the new homes developments across Ireland that are currently first home friendly. Michael and Rachel, you're both very welcome, and I look forward to your presentations. A couple of housekeeping items just before we get started. The webinar will finish at 1:45. We know everybody is extremely busy, so we'll move through the presentations in about 25-30 minutes and leave some time at the end for a panel discussion with Michael and Rachel, and also some Q&A. We've received a lot of excellent questions during registration. Some of those questions will be covered in Michael and Rachel's presentations, and others I will put to both Michael and Rachel in the panel discussion. Please pop any questions that you have in the Q&A box at the end of the screen as we go through the webinar. I'll try my best to cover as many as possible during the panel discussion. And also, the webinar is being recorded today and will be sent out to everybody that registered for the webinar. And we'll also share some useful links during the presentation. So get your phones ready, folks, and be ready to take a screenshot. Before I hand over to Michael, I'm just going to give you a quick update on what's happening in the mortgage market. I think it's fair to say the last 2 years have been transformational compared to the previous 10 years in the Irish mortgage market. We've seen a number of mortgage lenders leave the Irish market. We've seen record levels of demand, particularly from first-time buyers. We've seen big changes more recently in terms of mortgage interest rates. And we've also seen a big shift by mortgage customers going to brokers for their mortgages rather than their primary bank. If we look onto the next slide, if we can just move it on there, Connor. Yeah, and if you just go on to the next one. And again, if we look at mortgage lending in recent years, 2022 was the highest year for new lending since 2006, with over 14 billion in mortgage drawdowns. First-time buyers made up 50% of that new lending, and 25% was made up by switchers as existing customers locked in low rates before the interest rate changes came last year. If you look at 2023, that strong demand has continued in last year and obviously into 2024. We have seen switcher activity fall off, obviously as rates have started to increase, but first-time buyers now make up 60% of new lending in 2023. So we really are seeing historical levels of demand from first-time buyers. Just moving on to the next slide, we've seen big changes to the lender landscape in the last 2 years with the exit of KBC and Ulster Bank, who traditionally made up 25% of new lending prior to their departure in 2022. Over 90% of lending last year was made up by the 4 primary lenders, as you can see, AIB, Bank of Ireland, Avant, and Permanent TSB. 2 non-bank lenders, ICS and Finance Ireland, that are also operate within the market, had lower lending levels in 2023, but are expected to return to the market in 2024. And we are seeing a number of new lenders emerging. Moco launched into the Irish market in the middle of November. NUA are expected to launch before the end of Q1. And obviously, credit unions have also communicated their ambition to do a lot more mortgage lending. So in terms of the mortgage landscape, whereas we have seen a number of significant departures, 2024 certainly looks like we will have a lot more lenders in the market. Just flicking on a couple of slides in terms of interest rates, obviously that was a big change we saw in the last 12 to 18 months, was the increase in interest rate charged on mortgages in the Irish market. Banks source a lot of their funding from the European Central Bank, who have increased their lending rate 10 times since July 2022. If you just flick on to the next slide, Connor, we can see the fairly significant increase between July 2022 and September of last year. Lenders in the Irish market have passed a lot of these increases on to consumers. If you look at the next slide, it shows that the average rate for mortgages in the Irish market, and this is as of kind of Q3 last year, is just over 4%. The green bar in the middle representing Ireland, ahead of the EU average, and very much kind of middle of the pack compared to other EU countries. The good news is that the last ECB increase came in September, and we haven't seen any further increases in the last number of months. Most commentators expect the European Central Bank to reduce their interest rates, but it's probably going to be the second half of 2024, and hopefully we will see those rate decreases passed on by the lenders in the Irish market. Just moving on to the last slide, if those of you that joined us last year for the webinar in both March and November, we spent quite a bit of time talking about how first-time buyers can get mortgage ready. We covered aspects such as how much you can borrow, what do first-time buyers need to qualify, what is important for the lenders that are obviously providing the finance to first-time buyers, and where do I go to borrow? I'm not going to go into the detail of that today. What I will say, and if we flick onto the next slide, you can access those webinars on our website, on the Sherry FitzGerald website. You can see the link there if you want to take a screenshot. The website also has a number of useful guides for first-time buyers in terms of how they can get mortgage ready. We have the mortgage calculator, and you can book an appointment with a mortgage broker. If you want to speak directly to a mortgage broker, you can contact us. You can see the details there in terms of the phone number and stuff like that. So we'll finish up on that. If you want to take the screenshot just before we move on. Rachel, we might start off with yourself. I know Michael is going to bring us through the detail of the scheme, but obviously you're going to touch on some new homes developments that we currently are involved in, which very much are first home friendly. So we might kick off with yourself.
Yeah, absolutely. If we just move on to my slides, Connor. The first thing I'll show you is how to search for a first home scheme friendly development on our website. So essentially our website, sherryfitz.ie, if you click into that and search for new homes, you'll see here in a second now, just one back, yeah. Anything that has the green icon that says FH essentially means it's first home scheme friendly. So you'll be able to find them all there in one place. And if we move on to the next slide. So I'll take you through a couple of schemes that we have in Munster, and starting in Munster as a proud Cork lady. We have Untubber in Patrick's Well, Limerick. This now has the benefit of falling into the increased price caps on the first home scheme that I know Michael will go through shortly. They were increased just very recently. So this has the benefit of now falling into qualifying for the first home scheme. If we don't mind just moving on there, Connor. In Untubber in Limerick, there's 3 beds available there. They're priced at approximately 395. So taking into consideration the first home scheme, you can, there we go. You can own one of those 3 beds for a monthly repayment of just $13.20 per month. And then I'm also going to highlight Lakeview in Middleton. We have 3-bed semis there, priced from $410, and they can be owned for a repayment of $13.70 per month using the first home scheme. So look, there are just 2 schemes that we have in Munster. There is another slide there that we'll try and bring up, but there are plenty more. I would encourage you to use the sherryfitz.ie website, as I said, and search by the first home scheme icon. I'll move into Galway then. We have 3 schemes in Galway. They all qualify for the first home scheme. 2, again, just very recently, as of the most recent price cap increase. Michael, again, will explain that further. So in Ardna Rathbunny, we have 3 beds from 395. Using the first home scheme, you can own one of these houses for repayments of just $13.20 per month. There's Connaught-on-Cashlawn, again, 3 beds from 400. You can own one of those for $13.77 per month. And then Garry-na-Sally, there's 3 beds from 420, which would be affordable at 1805 per month. We then have, of course, the GDA, the Greater Dublin area. Moortown in Swords, as an example, 3-bed mid-terrace price from 475. They can be owned for a repayments of 1587 per month. We've Ballymckenny Park, 3-bed mids there at 360. Can be afforded for 1203 per month. And once again, you'll see once the slides come up, and we'll also be sending around a live recording of the presentation with the slides. There are many more that we have on our books. So once you receive those slides, you'll be able to see each and every development that qualifies for the first home scheme. And again, I would encourage you to go to our website, sherryfitz.ie, search new homes specifically, and keep an eye out for that green icon.
Great, Rachel. Yeah, there's a couple of questions that came in at registration that I might just kind of put you just while we're waiting for Michael to join us. There's one very specific question in terms of if you plan on moving home from Australia with a house deposit, when should you contact your estate agent? You know, and obviously people expect that new developments do go quite quickly. What do you think of that?
Yeah, so if it's specifically in relation to a new home and you have decided that you want to move home and you want to purchase in the near future and you've saved your deposit, I would say there's no harm in getting in touch with an auctioneer straight away within the local area that you're hoping to buy in. You know, if you're not planning on coming home for another 3 months, 9 months, 12 months, I would still contact them as soon as you know that you've made your decision. You know, they may have a couple of phases coming up in local developments that might not suit you time-wise, but they can advise you of, you know, phase 3, phase 4, phase 5, or other neighbouring developments that they mightn't have started advertising yet. So I would say you contact your local agent almost immediately.
Yeah, one thing we also saw from the registrations, Rachel, a lot of frustrated single buyers who said they have very limited options to buy. I suppose, is there any kind of advice or help that we can offer to single purchasers?
Yeah, in that sense, I would have to say as an actual sales agent on the ground, since the first home scheme has come into play, I've seen an awful lot more of single income purchasers getting on the property ladder. Whereas, you know, home ownership was typically always seen as an achievement of a dual income. The scheme, you know, the 2 different schemes, the Help to Buy and obviously the first home scheme that are out there, is specifically there to help buyers get on the property ladder. So the first thing I would say is definitely go onto, you see on the screen there now, our mortgage calculator. So this has the first home scheme automatically built into it, including the local area price caps. So I would say if you start playing around with some numbers on that calculator, it'll show you essentially what income you need for your monthly repayments. Second of all, of course, I would advise that they contact Shane's team. You never really know what is within or without your reach until you actually start talking to a financial expert, and they can give you a real sense of your budget. And if you need any advice to continue saving, maybe come back again in 6 months, that's what they're there for.
Great, Rachel, thanks very much. And as Rachel said, there's a number, you can see it on the screen there, a lot of helpful resources that you can access to get a bit more information. Just while Michael is getting set up to present on the first home scheme, I'm just going to, there was a couple of questions that came in specifically around kind of mortgages. I'm just going to cover those off. So how much of a deposit should I have when applying for a mortgage? Typically for first-time buyers is 10% of the purchase price of the house that you have your eye on. But if you are availing of the Help to Buy and the first home scheme, that gives you other options as well. Can the deposit be gifted? Yes, you can receive a gift towards your full deposit or a portion of the deposit. But obviously you will need to satisfy certain repayment conditions that are set out by the lenders, including demonstrating your ability to repay and your ability to service any other debt that you have before you take on a mortgage. Question in terms of, can siblings do a joint mortgage application? Yes, all the main lenders do accept joint applications from siblings, and that is something that can be done. We might see if we can hand over to Michael. Michael, are you with us?
Yes, Shane, I'm here, yeah.
Good afternoon, and thanks very much for joining us. Apologies for the technical difficulties, but I think we're good to go. Rachel has updated us just in terms of some of the schemes that we're involved in that obviously are applicable to the first home scheme, but you might take us through the detail of the scheme. Obviously, it's been in place now for over 18 months. Some of the recent numbers show that it's been hugely successful and a big support to first-time buyers. So we look forward to hearing the details of it. And I know there's a couple of changes to the scheme that have recently been announced that you want to go through as well. So I'll hand over to you, Michael.
Thanks very much, Shane, and good afternoon, everybody. I'm delighted to have an opportunity to speak to you here this afternoon in relation to the first home scheme. And as Shane had said, we have gone strength to strength over the last 12 months, and I suppose we're just constantly trying to get the word out there about the scheme and information in relation to it. So this afternoon, I'm going to provide you with the information around the scheme, what we can and can't do, and how it can help you to get on the property ladder. So we're going there to the first slide, Connor. So I suppose, yeah, so look, the two questions are, who is the first home scheme for, and how can it help me buy my first new home? So the first one is really, it's for any first-time buyer who's looking to buy a new property. It can be a house or apartment, but it must be new. That's an important point. And then in terms of how it can help you, well, what we do is we will plug the gap between your deposit, your mortgage, and the cost of your new home. So as we move on through the slides, which we'll do now, we'll get into a little bit more detail on that. So just a little bit of background. Firstly, it's a 400 million euro fund, which has been put together by the government and the three main banks. And that's an important point because oftentimes we constantly hear about the government scheme. And to be fair, while it was an initiative of the government, the banks are actually heavily involved in it as well and are actually equal shareholders in the scheme. So the four shareholders are the Minister, AIB, to include Haven and EBS, Bank of Ireland and PTSB. So we have a total of 5 lenders. I suppose some of the myths that are circulating out there on social media in particular, I just wanted to dispel those to start off. So firstly, it is not a second mortgage. I know there are commentators out there who will tell you that this is another mortgage, and be very careful. You should be careful, of course, but it's not a second mortgage. And I'll demonstrate that as we go through the presentation as to why it's not. Another one is the government will own part of my home. So just to be clear, as you can see above, the government or the state are a shareholder in the first home scheme company. So it's the company that will hold the share in the same way that a bank will. It's not the government, it's not the state. And I know that is a concern for some people, thinking that the government own a share in their property. They don't. It's the first home scheme who take the inhibition. And I'll explain that a little bit further on as well as we go. And it can be used in conjunction with the Help to Buy. So that's an important point because, again, there's a lot of confusion out there as to whether or not it can be. And it most certainly can be. And in fact, the two schemes work very well hand in hand. And I'll talk about that a little bit further on as we move on now to an example of how it might be used. So the scheme, as Shane said, was launched in July 2022, and it was originally just purely first-time buyers who were buying new developments, new homes in an estate or in a development. Then, as of April of last year, it was opened to a tenant home purchase scheme. And what that is really is for people who are renting a house or an apartment, and they've been issued a notice of termination by the landlord, and that's effectively a notice evicting them, which is, and the rationale for it is the landlord is selling the property. Now, if you wish to actually buy that property, the one you're renting, we can actually provide you funding in the same way we would if you're buying a new property or doing a new build. So that's something new that was added to the scheme in the last 12 months, whereby we can actually help fund and bridge the gap, which I'll talk about in a moment, in terms of an existing property that you're living in, that you're renting, that you might want to buy. And then in September of 23, the scheme was open to people building their own homes. So this is a self-built product. And again, I'm not going to talk too much about that today, but all the principles around it and how it works are almost identical to the new build. Obviously, there's a slightly different drawdown process, as is with your mortgage, and it works in tandem with that. Again, all the information is available on the First Home Scheme website. So getting back to the objective of the scheme. So what is it about? So it's about bridging the gap. So let's take an example here, and don't worry too much about the numbers. You can extrapolate those into your own scenario, but this is just to give you an example. So we have a couple, it can be a couple, individual, family, whatever, but we have a couple who have a 70,000 euro income between the two. So they're looking to buy a property that's going to cost 350,000. So based on the current central bank rules, they can borrow 4 times their salary So that's 470s, which gives them a max mortgage of 280. And they also must have a 10% deposit. Now, I talked a moment ago about the Help to Buy scheme, and that's where the Help to Buy scheme can come in. As you know, the Help to Buy is a rebate of your taxes paid over a number of years, and it's money that you don't have to repay. So it's actually a fantastic scheme. But so that could potentially give you or assist you with your deposit, because a lot of people will say, well, how can I save 35,000, you know, with paying rent and so forth? And that's where the Help to Buy will come in. It can actually give you the money to get you that 10%, which you require to use our scheme. So in that scenario there, we have somebody or a couple who can get 280,000 in a mortgage. They can get 35,000 through their deposit with the Help to Buy scheme. But you can see immediately what the issue is. They're looking to buy a property for 350,000. They now have 315,000. So they're 35,000 euros short. So that's where the First Home Scheme can come in. We can give that 35,000 in the form of an equity slice. And in doing so, we will then take an equity share in the property by means of what's known as an inhibition, or it's basically the equivalent of a second charge. So again, in the same way that the lender, whoever provides you with your mortgage, will take a first charge over your home, we will just come in behind them and take a second charge. And once you repay the equity share, that charge will fall away. So it's no different to what the banks take over your property. And that's hopefully will alleviate some of the concerns or issues about the government coming in and taking a share of your property. So that's a very simple example there of how the scheme could work for you. Obviously, as I say, you need to plug in your own numbers in the context of price ceilings and so forth, which I'll talk about now. But we'll just move on to the next slide and see how do you qualify for the scheme. So the next one slide there has a list then of the qualification criteria. So we can just move on to that, Conor, please. So it's for first-time buyers, as I mentioned, with the exemption of the tenant home purchase scheme. But also it applies to people who are operating under the Fresh Start principle. Now, for people who may not know what that is, that's anybody who's divorced, separated, or who's gone through an insolvency process, or a relationship has broken down, and they now no longer have an interest in the family home. So you must forego any interest you had in the family home. And if you do that, you now qualify and you can use the First Home Scheme to go and buy a new property and get back on the property ladder. You must have a senior mortgage from one of the banks that I listed. So I know somebody's previously asked, you know, must I have a mortgage? Yes, you must. The idea of the First Home Scheme is that it plugs the gap between the mortgage, the deposit, and the price of the home. So this is not meant to replace debt. This is not a debt replacement product. It's a supplementary product which bridges the gap. And that's the whole idea around the First Home Scheme. You can also apply for a macroprudential exemption through your mortgage provider. And if you're successful enough in getting one of those, you then must make a decision of whether you use the MPE or you use the First Home Scheme. You cannot use both. And again, what we'd advise there that if you qualify for both is that you would go and talk to your mortgage advisor and discuss the matter with them, because in some scenarios it's more beneficial to go for the MPE. In other scenarios, it'll be more beneficial to go for the First Home Scheme. But it will very much depend on your own individual circumstances, and that's where you should go and seek advice to determine which is best for you. Self-builds, as I mentioned previously, are eligible since September 20 of last year, and it is specific to new houses and new apartments, with the exception of the tenant home purchase, which is the property you're renting in. That's the only type of second-hand property which we can use the scheme in. And often we're asked, how much can I get? So the maximum that's available to you under this scheme is 30% of the value of the property if you're not using Help to Buy, or if you're using the Help to Buy scheme, then this is 20% of the purchase price or the build cost of the property you're looking to fund. So that's 30% if not using the Help to Buy, or 20% if you're using the Help to Buy. So we just move on, Conor, then and talk about the next steps, which includes property price ceiling. So the minimum equity under the scheme that you can draw down is 2.5% of the property value, or 10,000 euro, whichever is the greater. So basically the scheme is not designed to lend somebody 5,000 or 6,000, because there's a cost in putting this in place. You'll have to go to your solicitor as well. And it's like drawing down a mortgage. It is similar to a mortgage in that regard. So there's a complexity around this that it's just not worthwhile if somebody's drawn down 5,000 or 6,000 euro. The maximum equity facility that you can avail of is determined by one of three factors. The first one of those is the price of the home. So how much does it cost? whether or not the customer is availing of the Help to Buy scheme, and that determines whether you get 20% or 30%, as I just covered. And then the final piece is the local authority area in which the property is located. Now, that's important because some of you will be familiar with the concept of price ceilings. So each local authority area around the country has a price ceiling in place. And I know a lot of people are saying, well, what's that about? Why is that there? That's prohibiting me buying a house of a certain value. So the rationale behind that is that is there actually to protect you, the consumer. And the reason for it is to ensure that the first home scheme is not contributing to house price inflation or is not distorting the market. And that's an important point, because in other jurisdictions where there's been similar schemes, it has been found that such a scheme has distorted the market. So from day one, we've had the concept of price ceilings in place. Now, it's important to understand that these price ceilings are reviewed. They're reviewed twice a year. And in fact, the latest review has just been done at the end of December. And we will look at each local authority area. We look at a number of different factors, include the median level for first-time buyer property over the last 6 months. We also engage with builders, developers, auctioneers, the likes of Sherry FitzGerald and others feed information into us, and we also then check the market ourselves. So we factor all of those points in. We then determine whether the price ceiling in a particular location is appropriate, whether it needs to be reduced or indeed it needs to be increased. And as of December, we just increased the price ceiling for 6 local authority areas: Galway City, Galway County, Limerick, Clare, Laois and Waterford. So those have had a €25,000 increase in the price ceiling for those local authority areas. And people, often send me emails and say, well, I can't buy a house in that area. And what we would do then is we will take a look at that, and we do take all of that on board, and we have a look at it in the round. And sometimes, people might want to buy, a very large detached property or whatever. And to be honest, the scheme is not necessarily designed for those this is supposed to be for your first time for starter home. So, sometimes the higher end homes are outside the scheme limits, but more often than not, we very much focus this on the first time buyer type market. So it's really gauged, I suppose, at your 3-bedroom, detached, semi-detached type property, suitable for young and new families. And then it's a starter home. You might be able to move on or move up into a bigger home, but that's something you desire further down the road. So we just move on there, Conor, to the next one, and we just flick through this one because that's just basically the price ceilings that are in place across the country, including the updates, and they're available on our website, firsthomescheme.ie. So all the information in relation to the scheme is there, including the price ceilings. And there's a calculator in the same way that Rachel was talking about, a calculator on the Sherry Fifth. We have a calculator on our website as well. And in that, you can just put in the details that pertain to yourself, and it'll very quickly tell you what the minimum and the maximum amount that you can actually take from the first home scheme is relating to your circumstances, depending on what local authority area you want to undertake your purchase or your build. So we just move on then, Conor, thank you. So how does the scheme itself work? So a lot of people ask us questions about, well, how does it, what kind of payments do I have to make? When do I have to pay, etc. So if we go on to the next slide there, we'll actually just go through it and actually give you an idea of what's involved. So this is an example of how the scheme works. And again, just don't worry too much about the figures. I know they're unrealistic. I'm talking about buying a house for 200,000. Oh, if only I can hear you say, but it's just for the purpose of demonstrating. So let's take a scenario where you're looking to buy a property for €200,000. You need a 10% or 20,000 from the first home scheme to assist you make that purchase. So let's say we go 10, 15 years down the road and the value of that property has increased by, again, just hypothetically, 50%. So that property is now worth 300,000. So the amount that you will owe first home scheme at that point is still 10%. And that's the key point. It's not how much you draw down. It's the percentage of the value of the property you draw down. That's what you owe. So in this case, you drew down 10% on day one. You still owe 10% because you haven't made any repayments. But now it's 10% of the 300,000. So you now owe the first home scheme 30,000. Now the same applies if house prices go down. So if it went down, say 50%, which we all hope will never happen, but if it did, it's now worth 100,000. It's now 10% of that. So the amount you owe the first home scheme is 10,000. So you can see that the amount you owe the first home scheme rises and falls with increases and decreases in the value of your property. And I know people often say to us, but that's unfair because now you're going to get 30,000 when you only gave me 20. But the point we would make is, well, yes, but we gave you 10% of the value of the property. So the amount you owe percentage-wise does not change. You got 10% on day one, now you pay back 10%. So in that scenario there, you're increasing your value, and the value of property you're increasing is increasing at the same extent as it is for the first home scheme. So, and that one there where it's gone back up to 30,000, you're getting 90% of the uplift. First home scheme is getting 10% of the uplift. And I think that's the way to look at it, rather than saying, oh, I owe more. Well, you owe more because the value of the property is worth a lot more. So that's a good news story for you as a customer. So just in terms of making redemptions, then you can make 2 redemptions in any 12-month period. And Conor, if we move on to the next slide there, it gets into a little bit more detail. Thank you. Sorry, the next one again. So you must get a valuation in order to determine the value of the property. And then you can make 2 payments within a 12-month period. So that valuation will be valid for 12 months, irrespective of what happens in the market. And you can make a repayment, 2 repayments during that 12-month period. So in terms of interest, this is another misnomer that's out there. So there's no interest as such charged, but what there is a service charge. So for the first 5 years, there is no charge whatsoever, but from year 6 onwards, there is a service charge of 1.75%, and that then increases over the years as you move forward. And the reason for that is it's to encourage people to repay the equity scheme as time goes on. So in theory, you can keep the scheme and after 30 years, it'll be a 2.85%. And this is where it differs considerably from a mortgage. So firstly, those charges are fixed for the life of the product. The second and more important point is that if for some reason it does not suit you to make those payments when they fall due, we will ask you at the end of year 5 to say, right, it's beginning year 6, you're going to owe 1.75% per annum going forward. Do you wish to pay these monthly, or do you wish to roll them up? And if for whatever reason it doesn't suit you to pay those at that point in time, you may have kids in college, it may be whatever, you may be unfortunate enough to have lost a job, whatever it might be, you can just say to us, no, actually, do you know what? I'm not really in a position to pay them now. I'd like to roll it up. And we said, that's fine. So what we can do then is we will roll up those service charges. But the key point here is they're rolled up at simple interest. So you're not like, if you miss a mortgage payment, firstly, you'll have lots of different penalties. And then also any outstanding payments will be based on compounding interest. So you'll be paying interest on interest. Whereas if you roll these up, there is no additional cost. So let's say your charge on, the first year is €600. Well, in 10 years' time, and you've rolled those up, you're still owe €600. It's not 600 by a multiple because of interest charges. So your roll up is based on simple interest, so it's not costing you anything extra. So that's a key difference between a mortgage and the first home scheme. The other aspect is that there is no fixed repayment date for the capital. So that amount of money that we give you on day one, whether it be 50,000, 30,000, 20,000, whatever it might be, there is no fixed repayment date for that. You repay that whenever it suits you at any point in time. You can repay it piecemeal, or you can pay it in one single lump sum. However, there are 4 occasions where you must repay the equity and any outstanding charges that are due at that point in time. So the first one of those, it's a sale of the property. So if you sell the property, say 10, 15 years in your property, you decide you want to move out, maybe you're moving jobs, you need to move location, maybe you want to buy a bigger house, whatever it might be. So if you sell your property in the same way that you must repay your mortgage, you'd also must repay the first home scheme out of the sale proceeds. Secondly, the property is no longer your principal private residence. So if you're fortunate enough to go off and buy another property and you want to rent this one, then great, but you must repay the service, or you must repay the equity share. It's not intended for rental properties. If you remortgage with a lender outside of the 5 lenders that I called out at the outset, then you must repay as well. The reason for this is those lenders are putting money into the scheme. They're putting 200 of the 400 million into the scheme, with the state putting in the other. So again, it's only fair that, they can't be funding somebody else's to partake in the scheme. So if you can change within those lenders, so you can move from any of those banks to any other bank, at no additional cost or without having to redeem. But if you fund outside the scheme, if you refund outside the scheme with a new lender or somebody who's not in it, then you must repay. And by the way, the scheme is open to other lenders, so we're talking to new lenders all the time and encourage them to try and join the scheme and the credit union. So I'd say just keep an eye on that space here going forward. But right now it's limited to the 5 I called out. And then finally, the death of the owner or owners. And again, that's in a scenario potentially where you're keeping it a long time. But again, and it's the second owner. So, if it's a couple or whatever, and one person passes away, we're not going to be knocking on the door saying you owe us money now. It's only after both owners are deceased. And then what happens is the estate becomes liable for that debt or that obligation in terms of redemption. So the equity or any outstanding service charges at that point become due, and they have to be repaid by the estate of the deceased. So if we move on then just to some other details. I've more or less covered most of this already. As I said, you can make 1 or 2 redemptions or repayments in any 12-month period once you have gotten a valuation. The product itself is not regulated by the central bank. Just important to flag that. And the reason for that is it's not a debt product, it's an equity product. As I said, it's not debt, it's equity. So, but however, having said that, the central bank were heavily involved, as was CCPC, when we were coming up and designing this product. So we've had a lot of engagement with them, and we operate pretty much as if it was a regulated product. So again, and they do keep a close eye on us. So you can certainly take some comfort from that. Annual statements will be provided to each customer in the same way you get mortgage statements. There's a helpline, there's email, you'll have a portal where you can log in and look at any of your documents. And at the moment, the original €400 million deployment phase is roughly 3 to 4 years. But we're finding that it's deploying a bit quicker than anticipated right now. So our big challenge now is to look at future funding down the road, but that's something we have to do. And as I mentioned already, security for the equity consists of an inhibition, and that's equivalent basically to a second charge behind your mortgage. So if you're unfortunate enough or whatever, if the bank repossess a property, they take the first cut, whatever is available, and then we will fall in second. We do not have recourse to you as an owner. Now, the only time we do in that scenario is if you do something to destroy value. So, for example, I don't know, you dig a very large hole in the back garden and the house falls into it. Well, then clearly that was something careless or whatever. But in the normal run of the mill, if you fall on hard times and the bank repossess, we basically cannot or will not go after you as a person. You don't have any personal liability for it. Okay, if we move on there, please, Conor. Just some interesting facts in on the next slide. So just as Shane said, the scheme is growing in terms of interest and popularity. So we've nearly 8,000 people registered, nearly 4,000 applications at this stage, contracts issued over 1,800, over 3,000 out there approvals in place. And the approval is by means of what's called the eligibility cert. And that's something that we issue from our website. So if you go onto our website, you can actually do your full application process through the website. The only hard copy of paper you will get is at the very end, when you will get a contract out from the First Home Scheme to your solicitor, and it'll also go to your solicitor, and you go in and you sign that with your solicitor when you're signing your mortgage documents. The funds will go directly from the First Home Scheme to your solicitor. You don't get your hands on them, but the solicitor then will use the funds to close the sale in the same way that you close it with your mortgage. So the bank don't give you the mortgage, they send it to your solicitor. We do the same. And it's all quite seamless because people are used to it now as well. A lot of solicitor firms are very familiar with it. And in terms of the application, an important point, I suppose, is that we don't do any underwriting on the First Home Scheme. So if you qualify for a mortgage from any of the banks that I listed out there, then and you're a first-time buyer, then you automatically qualify for the First Home Scheme. There is anti-money laundering, etc., but assuming that there isn't an issue there, then you automatically qualify. So from the time that you submit your application, you must have an approval in principle from the bank. You must upload that. You can expect to have confirmation back from us that you're approved for the scheme within 3 to 5 days. Normally it's 3 days, at maximum 5 days. That's assuming you upload all your information. Sometimes we hear people, oh, I've been waiting 2 weeks, and then we check and we find that, well, they haven't uploaded their AML document yet or whatever else. So once you upload everything, you will have a response back in a maximum of 5 or normally 3 days. And as of the last week, we had over 1,200 facilities issued. So that's people who are living in homes today, whom, 12, 18 months ago may never have thought that there would be an opportunity to get into a home. So that concludes, Connor. So you can just, if you go on to the last slide there, please. There's email there. If you have any queries or questions, that goes directly to the First Home Scheme Call Service Centre. Also a phone line there, you can call that phone line. And if you have any queries, questions in relation to the scheme that are not answered on the website, or that you're confused about, or whatever it might be, you can email or you can call that line. But as I said, all of the information is on the website, and that should be able to answer the vast majority of your questions. So thank you very much for your time. And Shane, I'll hand back to you there now if there are any questions.
Great, Michael, thanks very much for that very informative presentation. It's great to see the success of the scheme in still a relatively short period, but also to see the changes that have been made as you've kind of navigated the last 18 months. We are coming up on time, but I am going to be a bit cheeky and we're going to take an extra couple of minutes. So apologies, we did have some technical glitches, but there are a number of questions coming in, majority in relation to the First Home Scheme, Michael. So I might just do a rapid fire question round with yourself, if you can try and keep the responses as short as possible. So obviously there's a lot of costs involved, ancillary costs involved with the purchase of a property, such as stamp duty, property tax, land registration fees and stuff like that. Can the First Home Scheme be used to cover those costs?
No, in the same way that a mortgage can't be used for those costs, and neither can the First Home Scheme. So you do need to provide for those separate from the scheme. The First Home Scheme can only be used in relation to the purchase or the build cost of the property.
Great. When is the best time to register for the First Home Scheme? Is it sale agreed, after sale agreed, before the letter of offer? I think you mentioned once you go AIP'd with your lender, approved in principle.
Exactly, yeah. And in fact, what we'd suggest is, what we're finding now is a lot of people, and rightly so, are shopping around in relation to their mortgage. So they go ahead, they apply in our system, apply for the scheme, get all their paperwork, get their contract, and then they shop around. So what I'd suggest is shop around first. And once you've done your shopping around and you've decided on who your mortgage provider is going to be, then make your full application on the First Home Scheme. Because sometimes we've had people, who are literally about to draw down their mortgage, and suddenly we see from the contract that they've returned that they've changed funder, and that delays everything. Because it sounds like there's a simple process to just change one name for another, but it's not. There's a whole process that has to take place in the background in terms of reserving and releasing funds. So you don't need to worry about that, but you do need to know that it does take a bit of time. So the best thing is wait until you've decided on your mortgage provider and then make the application.
Great, thanks, Michael. There's a couple of questions in relation to the repayment of the shared equity part. So can you top up your mortgage to repay the First Home Scheme, and also can you pay it off in one full amount at once?
Yeah, so starting with the last bit, you absolutely can pay it off in one single payment. Absolutely, no issue there. In terms of your mortgage, clearly, if your banker prepared or lender prepared to give you a top up for that purpose, that's entirely between yourself and your lender. And we'll take the money. Once it's legal money, we'll take it from whatever source. But look, again, you might want to go and get financial advice on that, because just bear in mind what the cost of funds are from the bank vis-a-vis our cost of funds, which are 0 for 1 to 5 years. So look, that's not something I can advise on, but what I would suggest is you go and talk to somebody who actually knows their way around the financial matters.
Couple of questions in relation to other lenders that are not part of the scheme at the moment, Michael. I know you kind of referred to it, but specifically they were asking about Finance Ireland and the credit unions. Obviously, you said the scheme is open to all lenders, and you are hoping for a bit of a few new participants, I think, in 2024.
Yeah, absolutely. We're talking to everybody out there in the market. In fact, my objective is to have every lender in the market involved in the scheme. Now, some lenders themselves have enough business without needing to get involved, or they're in slightly different markets. So it's possible that we will never get everybody in, but certainly the credit unions and that we've had a lot of engagement with them, and they're very keen to join, but they have to go through their own processes internally within their own. So look, I'd say watch the space, but certainly we'd hope to be adding new lenders. But I'll be brutally honest, it's not going to happen in the next kind of 2 or 3 months. I think we're talking longer term than that, if I'm to be completely honest.
Great, thanks, Michael. Rachel, we do have a question in relation to a development, Barley Fields in Whitechurch in Cork. Is that part of the First Home Scheme?
So that will be dependent on the local area price cap. So as long as it's a new home, it will qualify, just depending on the price caps. So I would encourage them to go onto our calculator on sherryfitz.ie mortgage calculator, and if they just put the address of the property in, it'll automatically tell them whether it's within the price caps or not by taking the price.
Great. Thanks, Rachel. There was one question in relation, just the earlier question in terms of can siblings apply for a mortgage? Can friends apply for a mortgage? Yes, lenders will consider applications from friends for a joint mortgage. It's classified as a tenants in common application, so that is a possibility. Michael, there's a few questions just in terms of if you take the first home scheme and you look to sell in 2 or 3 years and stuff like that. How does that process work, and does it impact on the resale value?
No, it is no impact whatsoever on the resale value, because the purchaser won't even be aware that the first home scheme, and it's not a negative either. Like, it's just like your mortgage, the same way you have a mortgage. But the way it works is when you're going through the sales process and your solicitor gets the funds, they will they'll allocate X amount to repay the mortgage, and then Y amount will go to repay the first home scheme. So that transaction will happen in the background, and then we will, the bank will release their charge on the property, and we will release ours equally once we're repaid. So it should happen fairly seamlessly in the background once you decide to sell your property. But certainly, it should have absolutely no impediment on the value of the property.
Thanks, Michael. There's a lot of questions in relation to the local authority affordable purchase scheme and how that works with the first home scheme. Is it similar?
Yeah, just to clarify, there is confusion in the market in relation to that. So the local authority affordable purchase scheme is very similar to the first home scheme, but it's actually targeted at a slightly different type of property. So that's to do with properties that the local authority have either built or had built for themselves. So it's specific to certain developments, whereas the first home scheme is open to any private development anywhere in the country. You don't have to, it's not even like the Help to Buy where the builder has to be registered. There is no registration or anything like that in terms of it's open to any private scheme. So it's more gauged at private schemes, whereas the local authority scheme is slightly more gauged at, I suppose, social schemes, for want of a better way of putting it.
Yeah, there's a question just in terms of, is there any central place where you can find a list of developments that are, I suppose, first home friendly? Obviously, Rachel went through some of the developments that we're involved in. Michael, there's no central kind of database you check with the individual estate agents. Is that right?
Well, that's because, Shane, every scheme is open to it. So to Rachel's point of a moment ago, if it's within the price ceiling and it's a new property, it's automatically included. So there's no qualification required from a builder or developer to have their scheme included in their development included in our scheme. It's open to everything, and that's an important point. And I know the affordable purchase is not like that, and that's a key difference between. So our scheme is open to every new development right across the country, to Rachel's point, once they're within the price ceilings.
Okay, very good. I'm going to wrap it up with a final question. There's a few questions around getting the property valued, Michael, regularly. Like one person was asking, should I get it valued kind of monthly? Should I get it valued annually and stuff like that? Just in terms of bringing down the equity payments and stuff like that. What's the kind of rule of thumb on that?
No, again, I mean, that's ultimately up to a customer themselves, but like, there's absolutely no need for a customer to be getting it valued regularly. I mean, in the same way that you don't get it valued regularly to discover, establish how much you're going to get for it if you sell the property. I mean, I would suggest you do it when you're going to sell it or whatever. But other than that, you just, we have a mechanism in terms of the overall fund, which we undertake in the background, but you don't need to worry about that. No, I mean, the only time you need to value it is if you want to make a redemption down the road, and you can make a redemption at any point in time or two within any 12-month period, because evaluation will be valid for 12 months. But other than that, you shouldn't need to be getting a valuation, because that's going to cost you money,
Okay, very good. I'm going to wrap it up there. We've gone about 6 or 7 minutes beyond what we had committed at the start. Apologies again for some of the technical glitches that we had at the start of the webinar, particularly to Rachel, who wasn't able to share her slides. So sorry about that, Rachel. What we will do, obviously, is send an email out after the webinar to all people that have registered with a copy of the slides, but also the link to the recording as well, if you want to go back and re-listen to anything that kind of Michael and Rachel covered. Thank you very much for registering and for attending today. As I said, this is the 4th webinar that we've done for first-time buyers over the last 12 months, and we do intend to do a lot more in 2024, so watch this space. On the screen, you see, just before we wrap up, a number of useful resources for you to access. Is the First-Time Buyer Hub on the Sherry FitzGerald website. You can access a lot more detail in relation to the First Home Scheme on the firsthomesscheme.ie website, which Michael referenced. We have the mortgage calculator on our website as well, where you can do the various kind of calculations, and obviously you can factor in the Help to Buy and the First Home Scheme as part of that. And if you want to speak to anyone directly, just contact our first time buyer help desk. Leah and Nicole would be delighted to have a chat with you and support you there. So if you want to take a final screenshot just before we wrap up. Michael, thanks very much for your time today. And Rachel, we look forward to seeing everybody again shortly. So thank you.
Thanks, everyone.